Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within corporate filings. And today we've got a doozy that smells like a classic case of buying something you might not fully understand, or at least not the implications of. Stick around. We're diving into OPGEN Incorporated's latest report, and this one is all about a recent acquisition that looks pretty interesting, especially how they're paying for it and what it actually means for their business. Before we get too deep, if you like your corporate news straight up, no chaser, and with a side of savvy analysis, make sure you are subscribed. And hey, we've got a fantastic community over on Discord where we break down these filings even further. You'll find the link in the description below. So, on the 1st of December, OPGEN Incorporated, or OPGN as you might see it in trading circles, made a deal. They bought all the shares of a company called Sunday Investment Enterprises Limited. Now, Sunday Investment isn't exactly a household name, but it is important because it owns another company, iCaps SDN, BHD. This iCaps is a Malaysian company that offers what they call cap table management fintech platform services. Think of it as helping companies keep track of who owns what shares, especially when things get complicated. The price tag for all this, a cool $12,278,703.08. Now, here is where it gets a little more interesting. OPGEN isn't paying with cash upfront. Instead, they're issuing about 2 million shares of their own common stock, valued at $6.052 per share to the seller. This payment is expected to happen around the 20th of January 2026. This is a common strategy, but it means they're diluting existing shareholders to make this acquisition happen. Imagine if you own 100 shares and suddenly there are 2 million more shares of the company that exist. Your percentage of ownership just went down. So what exactly did they buy by acquiring Sunday Investment? OPGEN now indirectly owns iCaps completely. iCaps apparently has a deal with a client, a private company where they provide corporate advisory services. And after this acquisition was finalized, those services for this particular client were completed. And the payoff for finishing that job, a fee of $80,000 in cash, plus 1.4% of the client company's stock. OPGEN estimates this stock to be worth around $14 million. That is a pretty sweet deal if their valuation is accurate. It means the acquisition cost of about $12.3 million might be covered by this single client deal with a significant chunk left over. Plus they get the entire iCaps business. Now let's talk about who they bought this from. The seller, AI Capital Limited, is not just any seller, they are OPGEN's controlling stockholder. That means the person or entity calling the shots at OPGEN is also the one selling them a business. This is what we call a related party transaction, and while not always bad, it certainly warrants extra scrutiny. They're buying from themselves essentially. The valuation process they described involved comparing similar companies and then adding extra value for company-specific factors. This is standard, but with a controlling stockholder involved, you always want to make sure the deal is truly fair to all shareholders. OPGEN Incorporated's common stock is traded on the OTC Markets Group, Incorporated. This is generally considered an over-the-counter market, meaning it is not a major exchange like the NYSE or NASDAQ. Companies traded here are often smaller or emerging. The ticker symbol for their common stock is OTGN. As with most of these filings, there is a hefty section on forward-looking statements. They're essentially saying, hey, we're optimistic about the future, but things could change and we're not liable if they do. They mention risks like the value received from that client deal potentially differing from their estimates. This is a crucial risk factor to keep an eye on, as a big chunk of the perceived value of this acquisition hinges on that $14 million estimate. So, what is the story here? OPGEN has made a strategic move to acquire a fintech company, iCaps, that manages cap tables. The initial payout for a service delivered shortly after the acquisition looks very promising, potentially covering the entire purchase price with a good profit. However, the deal is with their controlling stockholder, which always raises a flag for fairness, and the valuation of the client stock, a significant part of the returns, is an estimate and carries inherent risk. The company is trading on the OTC market, which is less regulated than major exchanges. Looking at this, OPGEN seems to be trying to expand into a niche but potentially lucrative area of fintech. The iCaps business with its cap table management could be a valuable addition if they can integrate it well and leverage its technology. The immediate financial windfall from the client deal is a huge positive and suggests that iCaps has a track record of delivering. However, the related party aspect of the transaction cannot be ignored. It is vital for minority shareholders to ensure they are not being disadvantaged. The biggest risk here is the valuation of that client's stock. If OPGEN's estimate of $14 million is overly optimistic, the acquisition might not be as accretive as it appears. The company's presence on the OTC market also means it might be more volatile and less liquid than stocks on larger exchanges. making it harder for investors to buy or sell shares. In conclusion, OPGEN's acquisition of ICAX is a bold move with the potential for significant returns, especially given the immediate financial upside from the client contract. However, the related party nature of the deal and the reliance on estimated stock valuations introduce considerable risk. Investors should watch closely to see if OPGEN can truly capitalize on this fintech expansion, and if the estimated value of the client's shares materializes, it is a calculated gamble, and time will tell if it pays off. That is our deep dive into OPGEN's latest filing. What do you think of this acquisition and the way it was structured? Is this a game changer for OPGEN or a risky related party deal? Let me know in the comments below if you found this breakdown useful. Please give this video a thumbs up and subscribe for more, and don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and I'll see you in the next decode.